Welcome, everybody. Okay, great. Welcome, everybody. Welcome. Thank you for joining us. Thank you for making out time to be here. Um, Today, I thought we'll switch things up a little bit. I did something similar early in the morning, so you can look at that. It was just about 7 minutes session early in the morning, so it wasn't too long. So just want to do the same thing here so we can get abreast of what is happening. Um, so we know that before we take any trade, we should ask our three questions. And I'm sure by now we can all chorus those three questions. Uh, First, you need to know what did price do overnight, where is price now, and what must I see price do before I execute a trade? Okay, now that's very important. Now, while that is very important, it's also very key that we approach the market with a mindset that we do not control the bank. Oh, we did not control the market. Um, my thoughts were just I was remembering somebody who says, uh, "My father is not the owner of the bank." So, we don't control the market. In fact, nobody does. Nobody controls the market, and even big financial institutions, they cannot control the market for long, right? They can't control the market. Nobody does. So nobody has that capacity, that financial capacity, because this is a market that is doing trillions of dollars per day. This is trillions per dollar. We're not talking of billions. It's trillions now. Yeah, I'm sure it's trillions. Just give me one sec. Let me even just confirm that. I think it's trillions. I'm sure it's trillions per day that the market is doing. Um, let's see, Forex market volume per day. Is it in trillions? I'm sure it's trillions. I think I read that somewhere. That it does something like 6 trillions. Oh wow, okay. So I just typed it in ChatGPT now, and it says it does 7.5 trillion per day, right? So who is that person that has capacity, who has 7.5 trillion to move the market in a day? There's no one yet that is at that level, right? So no individual, no institution can move the market. So it's a level playing field. Okay. Now, with it being a level playing field, the second part, well, okay, we're going to divide this into three parts. So the second part that you need to know is that you do not control the market. The only thing you should focus on and the only thing you control is one, the instrument you decide to trade. So if you say, oh, I want to trade gold, or I want to trade pound USD, or I want to trade euro yen, whatever it is that you want to trade, that is the only thing you have control over, right? Secondly, you have control over where you decide to enter the market. So your entry is absolutely in your control. The market does not decide where you enter the market. You decide where you want to enter the market because you have seen your setup. So whether rejection candles or a break of structure or whatever it is that your entry process is, then where you put your stop loss, you control that as well. So I'll put these three and four, they're actually together. So the fourth one is the risk per trade. Okay, the risk you put for each trade and where you put your stop loss, you have absolute control over that. The next thing you have control over is your take profit. Where do you decide to take profit? So whether you decide to take profit at 10 pips or you decide to take profit at 50 pips or 1,000 pips, the market doesn't care. You decide where you take your profit, right? So now let's look at the third part, which is even a very critical part as well. And all these things, they go hand in hand, right? We have to learn these things hand in hand. So let's just list it out. What are the things you do not control? What are the things a trader doesn't control? Okay, don't mind my writing there. Okay, let's shift this one here this way a bit. Okay, what are those things that the trader does not control? One, you do not, well, the overarching thing is that you do not control the market price action. Okay, so follow through. let's say follow through. I'm sure you'll have heard me mention follow through, i.e., market direction. You do not control the market direction. You can decide to, you may get an entry, right? You get a break of structure, for instance. So that is one entry for you. But you do not control whether that market is now going to go in the direction that you saw in that market entry. You do not control that. The market will decide how it will move, right? So you could have, so a sub or under this is that because you do not control the direction of the market, you do not control the follow through, right, of what the market is going to do. Therefore, price can stop you out. It can do that. It can go sideways for a while, right? So it can go sideways for a while before going in your direction, right? Or it can even do, this one is the one that, is sometimes it's still painful. So it will weak you out. That means to stake out your stop loss, then go in your direction. Right? Market can do any of these things. You do not have control over this. Right? So because we do not have control over this, you have to look at the market as let's say like you come to it like a baby, right? A baby who just knows that, oh, I can see my parents walking on two legs. Let me to try to walk, right? And I know, well, the baby doesn't even know that they're going to fall a number of times, right? And even when they fall, sometimes they may cry, sometimes they will laugh, sometimes they just get back up again and try again, right? So that is how you should approach the market, with that mindset that, yes, I see a setup, but I do not control what that market is going to do. I do not control the follow through, right? So to help us with that, let me see. I'm not sure if I saw a good setup on, I saw one on, what's that market now? I think it was Euro USD that we did earlier in the morning. So, okay, let's go to Euro USD. Oops, that's Euro USD. Okay, so let's look at what Euro USD did the last few days. So let me just remove all these lines. You can see it was just going sideways for such a long time. Okay, so what did market do? Where is market now? Okay, good. So look at this. Let's just even look at even just yesterday. Okay, so what did market do yesterday? It started coming down, right? It pulls back up, does this, push back up, then gives you a break of structure right there. Okay, we come to the market around here, right? It gives you this break of structure there. So you have a break of structure. Now you're waiting for a pullback for you to now enter for it to go further down. But what does the market decide to do? The market decides to go all the way back up and give you another break of structure to the top side. Okay, so it gives you a break of structure to the top side. Oh, this is my mouse. I need to do something about this mouse. Okay, so it gives you a break of structure to the top side. Oh, shucks. Okay, it gives you a break of structure to the top side, right? Gives you a break of structure. So this initial break of structure here, if you put your stop loss right there, it stops you out, right? Then you have a valid break of structure to the top side. But what did the market do? It was not ready to go up yet. So it stops you out. Then you decide that, okay, I have a break of structure. I'm following my process. I enter a trade right there on this pullback, and you put your stop loss at the lows there. Then what does the market decide to do? It comes all the way back down. So you've had a stop out here. You have another entry here, which got stopped out, right? Then what do you do next? You just continue following your process. That is all. It is part of the process. It is part of the trading business. It's just like, imagine it's like a customer who comes to your business. A customer may decide to buy today, right? And then another customer comes tomorrow, and then they ask you all sorts of things. They see all the setups, they see everything, and then they decide not to buy. right? And another one can come and they decide not to buy. So just look at it as a customer coming to your market and they are not ready to buy your market, right? And some may even cause you losses, maybe losses in terms of maybe the energy you take to explain what the product is, what the benefit is, and all that, right? So you take a lot of time to study what is happening, and then you get losses, right? But in this instance now, so when you have this breakout structure down here, it is this one that then goes down a bit and gives you some what do we call it? It gives you some profits, and then it turns around again somewhere here. It runs around again somewhere here and then gives you some profit there, right? So the market will always do whatever it wants to do. You do not have control over whether this particular, so let's say here, for instance, you do not have control over whether this particular breakout structure here will then go to your take profits. You will not, you don't have control over the follow through, right? So that's why we always say concentrate on your process. Okay, concentrate on your process at all times. Okay, so let's quickly look at oh, okay, I've passed it now. USD. Okay, so let's look at wrong symbol. So let's look at what am I doing? Am I pressing something wrong? Okay. All right. Okay, so price has actually gone here now. So anyway, no problem. So we come back to this. So please always remember, just take it when you get a loss, just take it as a customer that was not ready to buy, right? Customer was not ready to follow through on what you were selling, and then you had a little loss. Okay, that's why we say you must always use proper risk management. Very important. Always use proper risk management in your trading. Okay, so here you ask yourself, what has price done overnight? You can see this, right? You don't, like I always say, you don't need a guru, a market guru somewhere, some expert somewhere telling you what the market has done. You can see it. You can see the breakup structure. So clearly you see breakup structure to the top side here, right? It pulls back a bit, comes back up here, then pulls back, goes all the way down, right? I think you may have gotten a market structure shift somewhere here, right? Anyway, it comes all the way down, okay? And now what has it done? It's done a breakout structure to the top side. Okay, you can see that breakout structure. So what do you expect next? Right? Now you expect, so let me just put that breakout structure there. Breakout structure to the top side. So what do you expect next? You expect a pullback. You expect some sort of pullback at some point. Okay, you want to see a pullback according to our process. You expect a pullback. Let me draw that here. A pullback, and then for markets to then continue going up. Now, the next question, if you're expecting a pullback, at what point will you say this pullback is no longer a pullback? It has turned into a bearish, it has turned into a bearish market. So with that, you look to the left, you look at where is the last opposite candle that pushed that price up. Okay. In other words, you're looking for your last valid range, and your last valid range will be down here because that's where the market started pushing up from. Right. So that will be down here. So if market does come all the way down and breaks below that level, then it is no longer a bearish, it's no longer a bullish market. It has turned direction and it has a potential, it has a probability of going downwards. Okay, beautiful. So let's look at, so gold is bullish now. Pound yen. Okay, what is pound yen doing? Wow, this man is giving us some nice setups here. So pound yen too is done a breakout structure to the top side. Breakout structure to the top side, pushes up, pushes down, does a small maneuvering there, then eventually comes to break structure here. So during London session, I'm sure some people will have gotten some of this trade, right? Then it's pulled back. You can see it. You can see the pullback. You can physically see that thing pulling back because you've done breakout structure right here. This is your last breakout structure, right down here. And then, so now what do you expect? You expect it to come back up and break structure possibly to the top side. Okay, so if this does break structure to the top side, then your last valid range will be down here, right? But as it is right now, Where is your last valid range? Your last valid range will be down here at these lows here. Okay. Let's look at the next price action there. This is Euro Yen. Euro Yen to what is Euro Yen doing? Euro Yen is pushing up. So this has pushed up. It came back down, tried to do some sort of market structure shift there, but it was not sustained. And then eventually it broke back up to the top side. Then it's pushed back, still within that valid range. Now it's pulling back up to these tops. Okay, so you expect markets to break structure and go to the top. Now, right now it's already at this top here, so no need to chase the market. Let the market come to you, right? The best time to have entered was on this pullback here when it was pulling back. Okay, you can say, okay, I'll wait. Let me see that break of structure, and then I'll wait for the next pullback and enter the market. Because if the market is going to do what it does every day, or what it does every time, well, if it's pushing up, if it's trending upwards, it will give you higher highs and higher lows, and it will give you more than one higher highs, higher lows. It will continue like that, higher highs, higher lows, higher highs, higher lows, right? So if you're going to continue that, then just wait for the next setup. Okay, no need to rush into the market, right? So let's look at the next one. Pound Aussie. Pound Aussie is pushing up, but he's doing so with a lot of hesitation. You can see all these wicks everywhere, wicks, and these ones are even very weak, right? There's a long wick down here. This one is a doji, another doji there. So something is happening, right? So even though it's pushing up, right, because this is trending upwards, right? It's showing a lot of hesitations, and perhaps it wants to turn around, or it wants to just go sideways for a little while. Okay, so I don't have anything to say on this one. Okay, let's look at the next one. Euro USD. What's this man doing now? But this man has just been going back and forth. It's not giving us a smooth. Let me even see. When last did it give us a smooth ride? It's been a while, right? It's been a while. I can't see. I'm trying to squeeze this in all in. So even this ride between here and these lower levels here, there were a lot of up and down. So it wasn't that straightforward, right? So just a lot of sideways movements, right? When you look at the bigger picture, right? Except if you want to, trade rejection candles, and you just say, for instance, when you're trading your rejection candle set up, right? You see this, you see price come down, right? And then you see this nice doji, which then gives you this bullish engulfing candle, and then you just take that trade to go to the top side, right? Mind you, if you took this one as your bearish engulfing candle, right, and you took a sell right there, so you'll be stopped out, but then you take this buy as well, and then you get some profits from there. So you see, it's a balancing act, right? When you take any of those three setups, or you take a combination of those three setups that we use, break of structures, market structure shifts, and rejection candles, right? It's a balancing act. Let's look at Pound USD. Pound USD, what is it doing? This one too looks like it's just trying to see if it wants to go up. Yeah, it went down, did a long wick here, then came back down and took. Oh, wow, this is just look at this. So look at my own thinking here, right? So look at this candle. Let me just highlight the candle for us. Look at this big bearish candle, right? It took one candle to go from the top here to the down to the lows here, right? It took one candle to do that. Now, how long did it take the candle from here, from the next candle? How long did it take it to get to this top, right? Look at 1, 2, 3, 4, 5, 6. It took 6 candles, or 6 30-minute candles to get back to this top here. That means there's a lot of things happening around here. Okay, a lot of rejections happening around there. Okay, and that could mean that price is still cooking something. It probably wants to turn around in the other way, because you can also see a nice just around that top again. So this first one, it got here, it got rejected, it came back down. So it pushed, used all the energy to push up, and then it got here again. It's giving you a bearish engulfing candle there, right? And then it's pushing back up again, right? So there's a lot of things happening around there. So this is all part of your reading what the market is telling you. Okay, reading what the market is telling you. There's a lot of rejections at the top there. So what is happening? It's either I say, okay, I'm not going to take this particular trade. I'll move on to the next pair and trade it, right? Or you wait for it to give you the setup you're looking for, and then you go with it. Okay. USD yen. Okay, let's see what's USD yen doing. This one looks a bit better, just not overly better, but just a bit better. I have a break of structures from the lows here. Break of structure here pushes up, pushes back down. Then it just only managed to come back up. It's pushed back down here now. So what do you expect? You expect it to push possibly to the top side. Okay, beautiful. So let's see. Do we have any questions? Okay? So gold is actually pushing up more and more now, right? Okay. Any questions? Let me check the chart if we have any questions in the chat. I'm sure we've done more than our 10 minutes. Okay, no questions in the chat. Okay, so let's keep trading and keep getting better. We'll meet again next week. For those in the inner circle, we'll be meeting tomorrow for our Q&A session. So come with your questions and let's continue to build and get better with our trading. Thank you very much. Have a blessed weekend ahead. All right.